Good evening, guys. Good evening. Welcome to tonight's live stream. Quick checks. Is the audio working? Can you see my screen? Is everything good? Someone let me know in the comments, guys. If everyone can see me, then we'll get going. Good stuff. Right. So, welcome. Welcome to tonight's live stream. Hang on, let me take my headset off. There we go. I can hear myself speak now. Bit weird. Oh well. So, tonight's live stream, we're going to be covering Module 5 TPO profiles. So this is the bit now, guys, and I need to be really real with you. This is where things start getting complex now. Everything that we've covered today has been relatively straightforward, in my opinion. Don't get me wrong. From an absolute fresh pair of eyes, it's still probably been quite complex. But I'm hoping that you guys, now that you're up to this point, you've gone through everything so far. Things make sense. Obviously, for this stream, you definitely need to have watched the last order flow module 4, which was obviously the introduction to the TPO charts and the breakdown of what they look like and things along those lines, because then that way it's going to help you massively with tonight's stream. So I have no doubt in my mind that you're going to have to watch this back again and again, which is absolutely fine, because obviously the videos are going to be there forever. So yeah, let's jump straight into it, because I don't want to waste any time with this one, because we've got a lot to talk about. So here we go. What is a TPO profile? So a TPO profile is similar to a volume profile in appearance. So as we can see here, we've got the TPO profile on the left hand side, and then we've also got the volume profile on the right hand side. And then you can still see the candles throughout. Now obviously whether you have the candles on or not, it's completely up to you. I'm keeping them on for now. I do prefer to have them on the chart. It's the volume profile sometimes I don't have on all the time, but I do have it so it's visible for me. It's just when you're looking at my screen you can't always see it because it's quite dark. But yeah. Now technically there are 6 types of profile, but today we're only going to cover 5. And the reason why I say that is because all 6 aren't relevant. In fact, there's 2 of them that aren't relevant really, but I have included one of them still. The final one, which is not going to be included, is effectively a direct copy of one of them anyway. The only difference is it's from the older days when it was just the stock market, and it was based on a strategy for trading the stock market. We'll cover it in a little bit. But yeah, so for all intents and purposes, there are 5 profiles. So anyone else will tell you there's 6. We're all doing 5 because the 6th is pointless, and you'll see why. Now the beauty of TPO, and this is where I can sometimes give you guys the heads up in the day about what I think is going to happen. You know, when I draw my little squiggly LARP lines, and obviously they don't all play out. Obviously, I'm human and we all get trades wrong. But you do see normally when I draw my little LARP lines that price normally does go in that direction, and a lot of that comes from TPO. So you guys are going to love this. So it can give us insight into the following day and potentially trade setups for intraday or trending moves. Now TPO in general is used, as I've said before, more for intraday stuff. However, if you've got an intraday that can then potentially turn into a swing, happy days. Alright, so that's what a profile is. Obviously we've got, as we discussed last time, we've got the selling tail, we've got the buying tail, we've got the value area of time, we've got the time point of control. On this side, obviously, you've got your volume profile, so obviously you've got your value area here, and you've got your volume profile here, volume point of control, and in this example, they line up perfectly, which is great. Obviously, you've also got your yellow here, which is your initial balance, so the first hour of the day movement, and then there's no single prints on this one. But yeah, obviously you get that. And if any of that confuses you, go back and watch the last stream. Okay, so let's start running through the days. So this profile is what's known as, it's got lots and lots of different terms. We're going to call it a neutral day because it's going to make life easier. So neutral day. In other people's language, it might be a normal day, it might be a standard day. You'll find various books that say each term, but we're going to call it a neutral day. So this is probably my favourite type of day. It doesn't happen very often, especially not at the moment, but in major ranging markets, either i.e. tighter ranging markets, you do see these quite frequently, and they're fantastic. So you'll see that the actual profile itself resembles a D. The actual main area here, it resembles a D. So what you've got is, you've got moving out and moving back down. So you've got this beautiful D structure. But obviously what you can see is on top of that, you can see prices moving up and down, down, up, down, and back in. But for the time being, let's just ignore the price. So price action opens within a fairly wide initial balance. So we can see this initial balance is very wide. And obviously we can see here on the chart, if in fact this one's a little bit harder to see, but effectively the open is here. Just here. So this is where the open is. So what we can see, obviously price opens up here and we form this initial balance. So in the first hour of the day, we create this really wide initial balance. Now, what it takes to be a neutral day is the wide imbalance, open and close the day within the time value range. This is really, really important. In fact, all these are. These are more rules rather than guidelines to follow. So you got price opens in the value range and closes. We can see this little arrow here. I'm hoping you guys can see it on your screen. I'm pretty sure you can. But the little arrow here that identifies close. So we've got the open and we've got the close within inside the value range. So this whole day is stuck within this value range. Okay, so and the value range is based around the initial balance. Okay, so the initial balance is within the value range and the whole profile is within the value range here. Okay. Ideally, and this doesn't always happen, but in a perfect world for this neutral day, you want a selling tail at the top and a buying tail at the bottom. Now, what we can see about these selling tails and buying tails, and again, another factor of confluence for it's a neutral day, excuse me, sorry, hay fever's playing up, is when prices come to the highs, and we've got the rejection here, we've got bugger all volume, so there's no volume. Yeah, same at the lows. At the lows, we've got very little volume. All the volume is contained within this. Okay, so price is opened, we've pushed down, we've tried to break the lows on little volume. Obviously, we've got the rejection. Move back up. We tried the highs, rejected, very little volume, move back down, and then eventually closed out within this value range. Okay, so this is what it takes within this here to be classed as a neutral day. Now, the beauty of the neutral day is, obviously, this is just a range-bound day. To anyone else, this is a range-bound day. This can happen anytime in a ranging environment. Okay. Now, the beauty of this specific type of profile is the following day, there is a high chance of another range-bound day. Okay. It's a very high chance. Statistically, it's over 60% chance of another ranging day. Now, it might not necessarily be a neutral day, but chances are it's going to be another ranging day. Okay, so by that I mean I'm not looking for a trend to move up and then a new range, or a trend to push down and a new range. I'm talking more sideways price action. It might trade sideways up here, it might trade sideways down there, but I want more ranging action. This is what this gives us the head up for. Okay, so if the following day happens, for example, and this is one example, so say we open up the following day after this, and we see price open up here, because obviously this is where we've closed, so price opens up here, then pushes down, for example, takes out these lows, but again we see it on very low volume, then I'd personally be looking to trade that as a swing failure pattern to push it back within this range, because the likelihood is we're going to have a range bound day because of this profile. Obviously it doesn't always happen that way, and that's something you've got to take into account. It doesn't always happen this way, but there is a high likelihood that it will be another range bound day. So if you swing fail the lows or you swing fail the highs on low volume and you do not see a confirmed breakout of this profile, i.e. lots of volume, lots of open interest, lots of positive delta, or in this case negative delta, then you'd be looking to fade that swing failure pattern within this. Or if price just stays within this, then you carry on trading this little small range that we've got. Again, intraday stuff, but this gives us the heads up. Now, I've made a little note down here. So the profile that we've not covered and we won't be covering is very similar to the neutral day. Very similar. The only difference is the initial balance is extremely large. Okay? So, and this is why I don't want you guys to worry about this, because I don't want you guys walking away thinking, well, that's a big initial balance, because admittedly, that is a large initial balance. So, what's the difference between this and the other profile, which again, funnily enough, is also called a normal day or a standard day? This is why it gets a bit complex and a bit confusing. I don't want you guys to worry about that, because I don't work that way. I personally do not look at them any other way. So for me, there are only 5 profiles. So the other one is very, very similar to this, and it effectively comes with the same outcome. So it doesn't mean you get a trending day next or any other day next. It basically gives you the same outcome. The only difference is the initial balance is wider. So don't stress about that. Okay, I class them as the same thing. This is a wide initial balance. This, in an old person's point of view that may have traded traditional land for his entire career and he's now in his 70s, he might class this as the other type, but not in cryptocurrency land and not now, because there's no need. Okay, so hopefully that makes sense. So this is a neutral day. Again, I'm expecting you guys to watch this again and again and again until this sinks in, but this is what it is. Next, moving on. Now this is a variation of the neutral day. Now the characteristics are near as damn it exactly the same. The only difference is the day closes outside the time value area. So we can see this. In fact, for some reason my software has chopped this off. So the initial balance, by the way, on this one is around here. So the initial balance is about here. So price opens up within the initial balance, and we can see on this chart that price closes up here, because we've got this little arrow here. So we can make it a little larger. See the arrow here? So price closes here, and we can see where it opens the following day here. Okay, so it's the same characteristics. The only difference is the daily close is outside of the value area. Now this, typically speaking, will give the following day a little bit of momentum. Now this is going tied, obviously the whole thing about TPO theory is tied in with the stock market. So for example, they don't trade 24 hours a day like we do with crypto, so it's a little bit different for them. So when price closes, they've got a big window before they actually come back to the charts the following day before trading opens again. For cryptocurrency, price closes here and the next minute we open again. Obviously it's a 24/7 market. So for us, it doesn't make much of a difference compared to the stock market. However, the momentum that this causes, I typically speaking, and again this is very, very context dependent, but typically speaking, I'll look to fade a move if, and this is a big if, the volume, open interest, delta, etc. all allow for it. So in this instance here, we can see neutral day, price closes up here. Price opens up, we see a push up, and we can see this push up here, and we can see that the whole push up is on piss poor volume, zero volume there, very, very low. So we see the price move up, failed auction, failed rally, whatever term you want to use, but we start losing momentum here. So we'll wick up, come back down, try again, and then drop back down. So this would be a great example of how I personally look to fade that move. I've seen this, I've seen a neutral day, but then we've closed above. So therefore, I'm looking for price. It doesn't always happen this way again, and I want to be very clear on this, but let's take these highs and then trade it back in. Now what we can see with this is obviously it's taken these highs and then we've come back down, and the lowest point of this day is actually the time point of control. Okay, so we can see here at the time point of control we've perfectly back tested it, then we've pushed up again. So if you were to trade this, and obviously right now we're completely ignoring all other forms of TA. If you've got other forms of TA, say for example you've got a daily level here, or a weekly level or whatever it is, and you've seen this happen, you've seen this profile, you've seen this push up, tap to daily level, then you'd be looking initially for either a scalp or an intraday on this, and we've played it back in, it's just about clawed its way into the value area of the previous day. Obviously this is time based as well. Obviously if we were looking at volume based, then the value area is slightly high. We've moved in, we've tapped the point of control, and then we've pushed back out, and then we've formed a new range here. Okay, so that's just because this has happened, it doesn't necessarily mean that price is going to come back down in completely within this old profile and continue ranging down here. We may form a new range up here, but this little open up here outside of yesterday's value area, ideally I'd be looking to fade that move. So whether that's moving up or moving down, I'd be looking to fade it. If however this is on the back of, so for example the past few days we've been pushing, let's press the button, shall we? We've been pushing up, ranging, pushing up, and then we see this range like this, and then we've pushed up, and then we see this range. Now because this is what I mean by context is key. Obviously right now on this example we're in an uptrend. We've pushed up, we found balance, we've pushed up, we found balance, we've pushed up, we found balance, and we could potentially be pushing up again. So again, it comes down to context. Okay, so this could have quite easily carried on, and the following day could have carried on, but this is typically speaking how I look to trade these things. But again, this is why I say context is key. Okay, if for example you saw this push up and you saw strong volume, positive delta, open interest, everything increasing, then there's no way in hell I'd be looking to fade that, because I will not try to fade against a strong bullish trend. Just like our price action's been moving down at the moment, you know, we've seen strong movement to the downside. Don't try to fade it. Okay, so this is the variation of the neutral day. So basically the same as the neutral day, apart from price closes outside of the value area. Hope that makes sense. Next. Now, this one is probably my least favourite, and I'll explain why. So this is what you call a partial trending day. So you'll see, and you'll hear traders talking about this. Traders refer to these as P or B days. When you look at the profile, you can see quite clearly you've got your push up, and then you've got your P. Okay, so you get P like that. Yeah, obviously if it was on the other way and we push down, then you'd form a B like this. Okay, so you get your P days and you get your B days. So what a partial trending day is, and this isn't necessarily, well, this isn't a strong trending day, but it can lead to more trending days, or when you see a slow bleed day, which lately that's been quite the case. So the day opens with a trending move. So we can see here, by the way, this profile down here is the same profile, it's just expanded, just so you can see it moving along with it. So we've got the initial balance down here. We look like we're starting to form a neutral day. But then what we do is we then push up, and then we start this new range. Okay. Now, the push up, the day opens. So this is Asia session. Obviously, the daily open, Asia session. So Asia session opens up and then pushes price up. But by the time we come to London Open, price stops trending and starts ranging. Okay? That's the key with this one. Now, the other part of this as well, and this is why it's not a full trending day, and we'll look at a trending profile later on, is because we've got no single prints. Now, this is quite a big thing, and again, this is why these profiles aren't great. So there's no single prints. So we've seen this push up, but we've got no single prints on the push up. Okay, no single prints. We've just moved up. No single prints. Pushed up, formed new range within London Open, and then it's continued sideways for the rest of the time. Okay, let's get rid of that. Move it. This is what I mentioned, sorry, a second ago. I lost track of thought there. Obviously, the moves aren't typically that strong, and even you can see here in this move, looking in the volume profile, there's not a load of volume in this. And obviously, if we could see this in real time, we'd also be watching open interest, delta, volume. We'd be watching that in real time. And if we could see that it's moving and it's not really giving us much, there's a bit of negative delta, open interest is choppy, volumes there or thereabouts, but it's just bleeding up. It's so much easier to describe bleeding price action when it's bleeding down. But obviously this is the same. It's just bleeding up is this in this case. So bleeding up, then we form a new range. At the top, we're looking for volume to accept back in an old profile or create a new one. So obviously if this is complete price discovery up here, so this is all price level here, and this is all price discovery up here, then it's going to create a new profile. But also, it could be then joining, if this is not price discovery, this could be joining an old profile. Okay? So it's something to keep an eye on your TPO charts. If prices, for example, have come down and then come back up, and then we see this, and obviously we're trending in this old profile here before they move down. Okay, just as an example. Now, the reason why I don't find this useful is again, it comes down to the slow bleed scenario. Is it's not strong enough to catch. It's fairly weak. It's meh kind of day. It doesn't give us an insight into the following day, because this could then continue bleeding up slowly. It could come out of the stocks and absolutely rock it. Or likewise, this whole move, because it were on very weak volume, we could just come back down and then continue ranging back here. We don't know what's going to happen next. It doesn't really give us an insight, and this is why this to me is the worst kind of day. But you do see this more often than not. This is quite a common day type. So days like this, you look at it and you go, it's not really giving me much. What's my other TA saying? What's the footprint saying? What's imbalances saying? What's my standard TA saying? Because TPO is not really giving me much. Okay, so not a great profile, but now you guys know what it is. Next one, trending day. Now, obviously, everyone loves a trending day, unless you're on the wrong side of it, and then everyone hates a trending day. Right, trending day. Very, very obvious is a trending day. So there's no room for error. There's no question marks like the previous day. It's very, very straightforward. So it's a single directional day starting early, typically speaking within Asia or London session. Ideally, in the ideal world, from Asia session. Okay, so right from the get-go, price is moving. So we can see here, initial balance open, ranging, boom, to the downside. You can see this whole volume profile, how spread out this volume is, because all it's done is just moved. It's just moved. And what we've done is we've created single prints, single prints, single prints. And none of them within that day have been backfilled. So they are all still single prints. Okay, so that's what we've got. So we've got price move down, pauses, price moves down, gets a little bit of a fill back up. So this area here would have been single prints as well, but what we can see is prices move down and then move back up and then continue down. So we've had a rest, we've pushed down. We've had a rest, we've pushed down. We've had a rest and we've created a new range down here. So this is a trending day. Now, as I say, single prints created, not filled within the same day. This whole price movement needs to be on significant volume, open interest and delta. Okay, obviously if this is just dropping like a stone, it might not necessarily be, especially on downside price action, you might not necessarily see positive open interest and negative delta. So you might not necessarily see a move like this move on new shorts, and that's something you really need to take into consideration about downwards price action. It may start or continue on new shorts opening, but a lot of the time in price down, it's normally longs closing out, because obviously the market is driven by well, not mainly, but a big portion of long only traders. So therefore when price moves down, people are getting stopped out. So that's something you really need to take into account. But either way, obviously you've got a lot of negative delta when price moves down. So you might not necessarily get the positive open interest, but you are getting the negative delta and the significant volume. Okay. If you do see it with open interest, then even better, even stronger. That means people are actively shorting it as it moves down. Right. So we've got two examples here. Now, both of them are examples of trending days, but this one is the stronger trending day. Now, you guys should be able to tell me this, like without even going just from these notes here, why this is a stronger trending day than this one. But the simple answer is we've got single prints, we've got single prints, we've got single prints. We've got a lot of single prints here. Yes, collectively we have a lot of single prints in this area. We've got 28 single prints here, which is quite substantial. So this initial move is big, but then what we've got is we've got continues down, but then we backfill any single prints that were created, we drop, we backfill any single prints that we've created, and we continue to drop, and then we range. So we've got no more single prints. So yes, we've started the day off, and we've started the day off a lot quicker. We're quicker off the mark with this move than we were with this one, because obviously we've opened the day, we've gone sideways for quite a while, then we've dropped. And we dropped here, excuse me, London time. This one, we dropped in Asia time. Still a trending day, but not as strong because we've only got one block of single prints. We don't have any more single prints down here because they've all been backfilled. Okay, so how do I personally trade when something like this is happening? First things first, if you're seeing this, so say for example you've logged into the charts, and say for example you've come online here, so this is your morning time, and you've seen this, you've seen this, you've seen this. Say you had plans because you've got a naked point of control here, for example. Are you going to take a scalp on that? No, because it's a strong trending day. We can already see, and obviously when you've backed up with the volume and the open interest and the delta and everything else, you're going to say, I'm not going to take any scalps off this. I'm just going to go with a trend. If I'm not in a trade here, if I'm not in a short already, I'm riding this down, I'm just going to sit on my hands and wait for a new range to form. And this is where controlling yourself, controlling your FOMO comes into play. You know, I'm not going to try stop this because this is just a steam train. You jump in front of a steam train, you're going to get wrecked. Okay? This one, on the other hand, is a weaker trending day. So obviously, perhaps we've seen this single print being formed. We've seen this bounce. We've seen it move back up. And we're still seeing that there's a lot of shorting action going on. There's a lot of negative delta and everything else. So we're like, okay, so chances are it's going to continue with this trend. And you see this move. And you think, well, I've got a naked point of control that lines up perfectly with a daily here. As an example. So I'm going to take a scalp long. So you take a scalp long. You take profits early because you can see that we're trending downwards. It's still a trending day. You know, we've seen this right from the get-go. Right from the start. Straight out of the stocks, we're going down. Okay? So, but it's weak. We've created some single prints here. We've backfilled them. We've created some single prints here. Again, but because we've backfilled them here, it's all about context. It's a weak trend. Let's take a few scalps. So we scalp it. We move back down. We then get stopped out after it's TP1. No problem. Bear in mind, obviously, this TP could be anything here. This is just an example. We've moved back down. You know, we have, for example, some other levels down here. I'll quite happily counter trade the trend on scalps. I'm still recognizing it's a trending day, but I'm not scared to take a counter scalp. Okay, this is the big difference. Big difference. You know, you see price coming into a big daily level or something along the lines down here. Quite happily take a trade. Because especially once price comes down here as well, you can see that there's no other single prints apart from these initial ones. There's no other single prints. You know, volume's starting to teeter off. We can see even down at the bottom, volume completely falls off a cliff here. So yeah, don't be scared. You've got to be in and out with scalps. We're going to cover scalps in a lot more detail in the future about, you know, how I trade them, for example. But if you are going to be scalping against the trend, don't be scared to do it in this kind of trending market. Do not do it in this kind of trending market. Do not. Because chances are by the time you've got your entry criteria, you've got your market enter into the position or your limit enter into the position, by the time you've even thought about putting your stop loss in, you're wrecked. Because it's just moving. Again, don't jump in front of a steam train. This one, you've got more of a chance. It could still go against you, but if you are good and you are fast, you can scalp these markets. Okay? Hopefully that makes sense. Next. This one is a double distribution day. Now, there's a whole strategy that comes along with this, and I'm going to teach you about that in the next session. But the long and short of a double distribution day is it's pretty obvious. You can look at it and you can see why it's a double distribution day. So you got a neutral day, single prints, neutral day. Okay? So, price resembles a B. Pretty obvious. B. Just with a big gap in the middle. Okay? As I said here, price creates a neutral day. And then we get a fast move down. Fast move down, creating these single prints. And in this example here, we've got 12 single prints. Okay? Price then's halted and then continues to range for the rest of the day. Okay? Now, the strategy that we'll come to in the future, and this will likely be next stream, by the way, because I've already planned it out, is basically how we can use this imbalance in the middle to our advantage and trade it, and basically ping pong between these things. Not that's a really bad example because that makes it look like you can do it time and time again, but yeah, you get the drift. So this double distribution day, you know, the day itself looks like a neutral day, but then obviously this happens on top. Yeah, so hopefully they make sense. Wrong one, right one. Neutral day, initial balance, price stays within this value range. It can move out, but it'll come back, but the profile by the end of the day needs to look like this. Okay, and even better if your volume profile lines up along with it, give or take a little bit. Yeah, so open and close within the time value range. Open, close. Chances are the next day is a range bound day. Not always, but chances are it's going to be. Okay, variation, neutral day, but price closes outside of the value area, potentially looking to fade that. All down to context though. Next, Partial trending day. This is the weak ass bleed day. Okay, price moves up. No single prints forming. Forms a new range. Okay, but the trick with this, and this is the key takeaway, it stops within London Open. So it doesn't have to be bang on London Open. It's not to the exact minute, but London Open, it stops within that profile and just goes sideways for the rest of the day. So London Open happens, carries on going sideways. New York opens, you might see this spike here, for example, great example there. New York closes, we get pre-close, and then we continue within this range. Partial trending day, very weak ass day, can't take a lot away from it and doesn't really give us an advantage. Okay, but low volumes, no single prints, and that's what we've got there. Trending day, strong moves, lots of volume, lots of volatility, great day for trading. Single prints, single prints, single prints, or in this case a slightly weaker day, huge block single prints, but the context with this one is the fact that it's right at the beginning of the day. This one takes a little bit of time to get going, but then does go. This one happens pretty much off the mark. Okay, strong trending days. Don't try counter trade them. Counter trend trade them. Wow, I've been saying that wrong the whole time. My English is appalling. Okay, that's that one. And then obviously finally, double distribution day. Neutral day, single prints in between. Okay, now next I've got a great example. And this is a great example of how you can use this to your advantage. And you'll like this one. So, what we've got a neutral day. Got a neutral day. And I'm pretty sure this is actually one of the examples that you've got earlier on. So, initial balance. Price opens up within this range. In fact, we can see it there. We've got an orange dot there. Price opens up here. Price then closes here within the value range. So we've got an open and close within the value range. The initial balance is within there too. We've got a selling tail. We've got a buying tail. And it's all contained in here. Great. So, we've seen this day. We've seen this day close now as a neutral day. So we don't know it's a neutral day until we've got the daily close, and that's very, very important, because we don't know until midnight UTC where that close is. So next day opens. So we've seen this now. Next day, we're thinking chances are we've got a range bound day because we've seen this neutral day. And lo and behold, look what happens. We get a neutral day. Not a neutral day, but we get a range bound day. Completely sideways day. So we've got price opens up down here. Initial balance. You can just see it behind this candle here. A little bit of yellow sticking through. And then sideways, 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 sideways. And we're pretty much sticking within this value area. Okay. We don't have a selling tail. We don't have a buying tail. Now, this profile by itself, and this does tie into TPO theory, but it also ties into other theories as well. This is what you call an inside day. Where's my call out? So there's a bit of an extra lesson here for you. A bit bigger. Where's it gone? Visual order. No, I'll keep it at the front. Let's just send that to the back. There we go. Inside day. Wow, that's going to really piss me off. Inside day. So basically what an inside day is when price opens and closes and does not breach the highs or the lows of the previous day. So hence the term inside day. So price stays within the previous day's range. Doesn't go above, doesn't go below. Inside day. Now, after you see an inside day, chances are the following day you're going to look to breach one of the sides. Now you don't necessarily know which one, but chances are you're going to take one of the sides. And why are you going to take one of the sides? Because there's liquidity above and below it. So you've got liquidity here. Obviously, bear in mind this. And you've also got liquidity here. Low of the days here. Okay? So you've got a liquidity box here. And you've got a liquidity box here. Now, the beauty of an inside day is the following day, after an inside day, chances are someone is going to make a dash for one of the sides liquidity. And whichever dash they go for, chances are it's going to fade the opposite way. And this is a whole trading strategy by itself, by the way, guys. So, you see this. You see price opens up here. Oh, by the way, for reference, price closed outside the value range. So this ties in. So keep this in mind. Obviously, we've got neutral day. Price opens and closes within the value area. Price opens up here, but then closes outside of the value area, and it closes on the downside. Okay? Keep that in mind. Let's just let's just collectively hide those a second. Let's go back to this. Neutral day variation. What did I say about the neutral day variation? You've got a neutral day, but price closes outside the value area. I'm looking to fade it. So this is a slightly different example because this isn't an inside day. You know, if we did have an inside day before this would be the same example, but it's not. We've got price closes outside the value range, then I'm looking to fade this move. Price pushes up, continues the momentum into the following day, and then comes back down. And we've done it on poor volume. Okay? So let's go back to our example. Here. Neutral day. Inside day. Price closes down here. Would have been a neutral day otherwise, obviously without the buying or the selling tail. Price opens up, and we make a dash for the liquidity on one side. And we not only take this liquidity here, that we've already got drawn out, we also take these stops here. We're taking these stops here. We can see, look, the buying tail comes down here. So we take these stops here, grab this liquidity, push back up, move to the top, come back down, and then we close. In fact, where's the close on this one? From memory serves, yeah, the close is here. In fact, it's just underneath this, so it's just above the value area high. So this is the close right here. Okay? So, we've seen this, we've traded this, smashing trade, inside day, we've taken the liquidity on one side, swing failure pattern, not bad volume either, but it's not followed through, so obviously open interest and everything else was key on this. Trade this back in, so now we're trading the range, and obviously if you'd have taken that trade there, you'd be looking for the top of this range, let's be honest, you'd be looking for the top of the range here, take out these highs potentially, and look what happens, it takes out these highs. Great, grabs a little bit of liquidity here, moves back down. Now, let's be honest, this could have then dropped back down here, but it's context. Inside day, we've taken the liquidity from the first side, then I'm looking for the opposite direction now. Because why else would you grab that liquidity if you weren't trying to push the market this way? Then look what happens. Price opens up here, and then instantly you get your trending day. You open up, big block 22 single prints, albeit it slows right back down again, slows down, moves up, creates a new range. It's such a great example is this, guys, such a great example. And you could have traded all of this price action here, you could have traded based on this daily close. Okay, let's run through it one more time, just so you're clear. So we've got neutral day, initial balance, open and close within the value area, beautiful selling tail, beautiful buying tail. Perfect example of a neutral day. So therefore the next day, there's a good chance, it's not nailed on, but there's a good chance that we're going to get another range bound day, then we see this range bound day. So we might not necessarily have taken any trades in this, but we also might have at the same time, if we had other confluence, we might trade this down, might trade this up, we might have taken some scalps in here. But then we've seen this daily close as an inside day. We've not taken the highs, we've not taken the lows. We've got no selling tail, we've got no buying tail. So we've also got poor highs and we've got poor lows. However, we've closed outside the value area range on the bottom. So chances are we're going to open and follow the momentum. So if we're going to do that, chances are we're going to grab this liquidity here, and we may even grab this liquidity here. And we do. We grab that liquidity, we move back up, and by the end of it, we're up here. Okay, so we'll fill out this day. We see that we've now got a buying tail, so we've got demand here. The bulls have stepped in, but we've closed this day as a poor high, so therefore we've got unfinished business up here. We've had no real sellers getting involved here, which is why we haven't created it. So we've pushed up, rejected, we've pushed up, we've rejected, we've pushed up, rejected, we've pushed up. Obviously, more times that price taps on a SR level, the weaker it becomes, remember. Again, all context. Open up, boom, blast straight through them and we don't look back. Okay? Absolute great example is this. And that's an absolute, it's so beautiful, it's so perfect, so perfect. And this does happen. This does happen. This wasn't that hard to find, this example. It does happen. I remember this one, in fact. It does happen. Okay? So that's how we trade them. And this is the power. And all this started from this one neutral profile. One neutral profile. Everything started from. So it all came from this. This blended in to an inside day, and then the inside day itself was a neutral day variation, which then we were looking to fade, and then from there it turned into a trending day. Okay, I'm hoping that makes sense. I'm hoping that I didn't go too fast with that, but that is probably your best example that you're going to get, and that's just perfect. So this gives you, if you didn't trade this first day, this gives you potentially 1, 2, 3 days worth of trading. Okay, all from one profile. And this is how valuable it is. Now, do you reckon that the vast majority of retail out there are trading this way? No, they're not. Because people see TPO charts and people run a mile because I think, what the effing hell is that? But now you guys know. Now you guys know. And as we continue moving through TPO, this is going to make more and more sense. Things are going to start really falling into place. And you can tell I'm getting excited because my voice is getting lighter. Right? This is the stuff. This is the next level stuff. Okay? So, in summary, there's 5 useful TPO profiles. Okay? Ignore the 6th. It's exactly the same. Right, so we've got neutral variation, partial trending, double distribution. This is your weak ass one. This is your brilliant one, because this can lead to a lot of setups. This one, don't fight it unless it's fairly weak. And obviously you see in the single print field as it's moving along. Neutral variation gives you a little bit of a heads up on potentially an SFP trade the following day, maybe a little bit more, maybe nothing at all. And then double distribution, we're going to cover this on the next stream. Okay, the profiles can give us an indication of the following day. On an FYI, and in fact I didn't mention this, but with your trending days, get rid of that. Hide trending. No, trending. With your trending days, if you see this happen and then price moves down, and then if you don't, for example, if you see price moving down and then you don't see much range in activity at the end of the day, so for example it just carries on dropping to the next day, what you might find is you might find another trending day on the back of it, or you may find a partial trending day on the back of it. So it just basically continues to bleed. So you know times when you've seen price tanks down, crazy, tanks down, crazy, tanks down, and then you might get out of the side, a little bit of change, and then you've got a new day here, and then your new day happens, and it just meh. In fact, today did it. We've obviously had the big trending move yesterday, and then we just carried on slow and bleeding today. Okay, great example. So this is why a trending day can then, if it continues to trend right up until the end of the day, then you may see the trend continue the following day, or you may see the partial trending day. Okay, just a bit of a top tip there. Doesn't always happen. The stats aren't there to back it up as a yes, this is going to happen every single time, but it's just a bit of an FYI. Okay, so they can give us an indication on the following day. Now, TPO profiles do need to be used with other forms of TA, and you know me, I will always say this. I will always say it. I do know traders that will trade only with a volume profile, with a TPO profile, and the volume profile at the same time. I do know traders that will trade only like this, and that's absolutely fine for them. But I will put money on it that my win rate is higher than theirs because I use it in conjunction with other forms of TA. I'll always say it, the more confluence you've got at an area, whether that's your fibs, your SR levels, your point of controls, you tie that in with more confluence, such as TPO, all of a sudden your win rate is exponentially higher. Okay? Just keep that in mind. And then the final point to the summary. Just like anything else, just like when we're talking about CVD, just like we're talking about imbalances, we don't always see a clear profile every day. For me, if a profile isn't obvious, don't force a label on it. Now, what do I mean by that? It's actually a term from Elliott Wave, is this? But yeah, if a profile is not obvious, you know, what have we got here? We've got a partial trending day. So open up, we move down, and again, this is a great example for the slow bleed. And this is what happened. This is obviously yesterday's profile. We opened up here, and we have moved down straight away, right from the get-go. We've moved down, we bounced, we moved down again, shit volume, no single prints created, and then we found a range within London session. We found this range within London session. Okay, so this is before New York wakes up. Then we've just got a range. We do eventually close down here. Still classed as partial trending day. Today, what have we got? Well, today, so far, this could be an interesting one. Let's have a look. Today, I wasn't planning on doing this, but this is potentially great. Right, so we've got initial balance. We can see here, so price has opened up. Let's zoom in so we can see it. Price opened up here. We've got the first A of the day, and this is orange on my charts. It should hopefully be the same as yours, although the colours do screw up when you move it onto the desktop version, by the way, of EXO. Just an FYI, you have to recolour everything, but it's easier to colour the colours, copy the colours across. Put my teeth back in. So initial balance, price opened up. We're still within value. Now we haven't got the daily close now. Now the only difference with this profile is we don't have a buying tail at the bottom. So it could be classed as a neutral day, but it wouldn't be a perfect neutral day if price closes within this value area. And the only reason why it wouldn't be a perfect neutral day is because we don't have a buying tail. Okay, but for example, if we see a close outside value down here, and we see it as a neutral variation day upon close, and we see these poor lows here, then a neutral variation day with a close down here, you would look for a little bit of momentum into the following day. So therefore what you could be looking for is price opens up, comes down, takes these poor lows, and moves back. and continues in here perhaps, or even moves up higher. Okay, we don't know until this profile's closed, but worth keeping an eye on. Worth keeping an eye on. Okay, what else have we got? Got here again, another slow bleed day. It's not great. We've got price moving down right from the get-go as well, but it's just weak. It's weak. There's not much behind this. Obviously, we do have a lot of volume. I have had a lot of volume over these past few days, but it's not been a strong trending move. We can see that because we've got no single prints. Move down, back up, close down here. So what have we got here? Where's the daily close? We've got the daily close. In fact, we've got the daily close right down here at the bottom of the buying tail. Right at the bottom of the profile. So one could take from that we may continue, and obviously we did. Let's look at this. In fact, let's just look at a random one, shall we? Here we go. What have we got here? Let's look at this one. So what have we got here? We've got price opens up. In fact, we've got a strong trending day here. So let's have a look at the leading up to this. So look at this. Now, if I was a betting man, I would say these are weekend days. 5th of June, is that the weekend? 4th and 5th of June? Where's my calendar gone? Oh yeah, look at that. Weekend days. You'll see this quite often as well, so something to take note from this is weekend days. Typically speaking, you will see inside days. So like this is an inside day of this. Inside day and no buying tail or selling tail. And you'll see this quite often, which is why it's quite obvious when you see a weekend on TPO profiles, because you'll see this quite frequently. So what have we got? So we've got, and again, this is why weekends I don't really take into consideration. You can do, but I personally don't. So we've got that. So we've got inside day, which has then moved into a trending day. Obviously, loads of single prints right from the get-go. Instant buying tail, move. Stays around up here. This is the profile that's screwed up. In fact, from the last stream, if you remember. Move down. Yeah, you guys get the picture. Right, okay. So, next. Questions. Any questions, guys? I'm going to take a drink before I start choking to death, and please put your questions in there. If it's a question that I'm going to be covering in the future, I will tell you, because we've still got quite a bit to go, by the way, guys. Nobody's salve, mate. Oh, little one's okay. Hate when they wake up in the middle of the night. It's terrible. Any other questions, guys? Any other questions? I'm quite impressed we managed to fit that into an hour, by the way, again. Really am. I'm just waiting Airball's typing. Let's see what he's got. Come on, be a really juicy question, mate. Don't create all this suspense and then tell me thanks for the stream. Give you guys a couple more minutes. Aha. There we go, mate. Right, so question from my bot. Ooh, I didn't mean to press that. Oopsies. Where's my text? This one. Ah, come on. Computer skills, spit it. Computer skills. There we go. Fair value gap is SP, right? I saw some people say fair value gap acts as a magnet. Is this true or not? This is a funny one, is this? So the fair value gap is a concept which is from ICT, or inner circle trader. I've seen a few different gurus also use the same terms, and obviously it comes down to order block theory. It's derived. Now I didn't come up with ICT, and I didn't come up with a fair value gap. So this is my opinion, and I want to be very clear on this because I don't want to offend anyone. But it's kind of derived from single prints. However, the fair value gap can also be considered on many time frames in their strategies. Now, when it comes to TPO theory, it's strict. It's very, very strict. It's based on 30-minute candles. And obviously a single print is obviously price moving through a block, one block at a time. Yeah, so single prints. Fair value gap's not the same thing, but in a sense it works in the same way. Now, when they say acts as a magnet, is it one of those self-fulfilling prophecies because they all think it acts like a magnet, so therefore it does? I honestly couldn't say. But yeah, I don't count them. Let's just put it that way. Fair value gaps, order blocks, they do not become, well, they are not part of my strategy. I will not teach fair value gaps. Single prints are the way forward, and the reason why single prints are the way forward is you will see next time, the next stream on what we're going to cover, how powerful single prints are, and you guys can be, make your own decisions from that, whether you think fair value gap's worth it or not. But for me, yeah, it's not my cup of tea. Next one, Potts. Herbal, I hope that answers your question, mate. Why is it on this? I expect something. No. Is it very uncommon to have multiple same-day profiles? But if it does happen, can you expect something in particular to happen? Is it very uncommon to have multiple same-day profiles? Yeah. In short answer, it's quite uncommon. So, for example, like the neutral day, for example, if you saw a few of them in a row, it'd be very, very, very confusing as to why that's happening. Chances are you are going to see some sort of deviation within a range, because obviously we know full well that a range, typically speaking, isn't just a daily candle size all the way along. Otherwise, it'd look quite odd. This, I'm just going back to this here. Obviously, this was quite odd. This perfect range that formed, if you remember, it was caught between the value area high and the value area low, and it was just pretty much perfect. But if you saw these daily candles pretty much exactly the same all the way along, like these two, then you might get some of the same daily profile types within that. It would be quite weird, and I'd be questioning it, and I'd probably be looking at moving something up out of it, basically. So, for example, if you got the range-bound style days all in a row, then eventually, over time, volatility is going to build, and you're going to look to break out with that range. You might get multiple trending days in a row, but again, it can't go on forever. A trend cannot go on forever. It's going to reverse at some point. So, it doesn't necessarily mean something's going to happen, but yeah, in theory, if you had lots of the range-bound days in a row, then naturally you would expect volatility build, and you'd expect to see an explosive move out of it, or a bleed move out of it. So that's all you can really get from that. But yeah, it doesn't really happen, if I'm being honest. But that's not saying it can't happen. It can happen. Anything can happen. It's trading. It's crypto. You can make millions overnight and then lose it all the next day. Great, thanks. Cool. Right, I think that's everything. Right, guys. So, next stream, obviously, is live chatting. That's going to be next Tuesday. After that, the plan is, and I've got this one already prepared out, the next session we're going to cover in depth buying tails, selling tails, single prints, double distribution day trading,
and the strategy behind it, and are also going to cover what we call ledges as well. In fact, we did have a great example of a ledge earlier today, but I don't know if it played out. Yeah, it did. Look at that. So we had a ledge here. This is a ledge. This is a quick insider into what's going to happen. So a ledge is when you see this kind of action here. So obviously these are 30-minute candles. We've got close, 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 close. Price moves away. Now, what I was looking for with this, and this has been honest, is this to happen and then a candle here to take these highs and then move back down. But we didn't get that, but that would be a ledge. So yeah, so we've got ledges, double distribution days, selling tails, buying tails, and single print. So the next session again is going to be very, very heavy. Watch it again